Fed Chair Jerome Powell told Congress today that the central bank is in no hurry to cut interest rates, but could potentially inflationary tariffs cause the Fed to alter its plans. Let's ask Brian Milbury of Zacks Investment Management. Brian, given the uncertainty around tariffs and other political policies, have we entered a phase where investors are less expecting Fed rate cuts in 2025 and more hoping that they don't see Fed rate hikes?
I think it's a great question. It's one that we've been monitoring for some period of time. We got some relief in December, especially when it came to core pricing structures. But the 3 months before that, September, October, November, if we looked at those core CPI numbers and annualized them, it was running hot at 3.7%. So that definitely gives you a basis for raising interest rates rather than cutting interest rates. Now, the likelihood of rates actually going higher is really pretty small. That would definitely be a huge shock to the market and something that's not expected. What we would expect is for rates to stay at their current restrictive level just for a longer period of time. We will only see one or two rate cuts the rest this year, and those might even happen later in the back half of the year.
You mentioned core CPI, the consumer price index, and we get that data tomorrow again. What do you expect that we'll see?
Well, where we got relief last time around was in a little bit better structures other than used cars and rent. So those could be the actual two drivers for better data tomorrow. If we see lower prices in used cars and rents, it might actually put a measurable shift lower on those core pricing structures. So it was all the other services outside of those two items, and that's what puts a big emphasis on the gains that were made in December. They could actually reverse now and give us a little bit of relief. Not a lot, but again, those annualized numbers, anything north of 3% means we're moving in the wrong direction to get to the target of 2, and that's really what we expect from the data tomorrow.
You mentioned cars, and I'm going to shift gears and talk about Tesla, which has been the worst performing stock among an underperforming Magnificent Seven this year. Tell us exactly, I mean, we know that China sales, which is a big deal, have been slowing for Tesla. Do you think that investors are circling back to that feeling that maybe CEO Elon Musk is a little too scattered, a little too overextended? That's a feeling that they've had before. Now, of course, he's part of the government. What do you think?
Well, you certainly can't avoid him. He's in the news every minute of every day, especially as he's live tweeting, his current responsibilities inside the government. So it's really hard to avoid that key man risk. And I think a lot of people are just concerned about his divided attention. What we know about Tesla, if we can separate Elon from the balance sheet for just a second, is that yes, China sales are slowing, but other segments of the business are actually growing and doing very well. The power segment, which includes charging and the Tesla Powerwall, is doing very well. Annualized growth there north of 30%. If that continues to go well, then it really doesn't necessarily matter what happens in terms of unit sales in China. They can balance that out. Now, we also know that you're probably not going to get the same type of subsidies for EVs in general. That certainly has an impact. But Tesla Auto has the best margins in the business. So they're a little bit protected there from other people as well. So you kind of really have to separate the man from the balance sheet, and then you get a little bit better picture.
We know that Elon Musk is leading a consortium that made a bid for the company for OpenAI, which does ChatGPT, $97.4 billion. What effect could that potentially have on Tesla's stock?
Well, again, it just comes down to how many, juggling balls can Elon Musk keep in the air at the same time. It's those divided loyalties. Is this really another business that he's able to run? Now, that's the headline. Underneath the surface of that, Elon's already doing it at X with xAI, which happens to have the largest data center right now, at least at the moment, with the highest functioning supercomputer. So you're just simply going to take the latest model of OpenAI's ChatGPT and fold it into an existing business. It's not something that would be extemporaneous to what he's currently doing, but you're talking about $100 billion purchase and another role in terms of managing this new chatbot. But the reality is underneath the surface, he's already doing these things at X.